Welcome to the Daily Brief. This is being prepared after Friday's session, August 26th, where I'll go over the highlights in the market for Friday, and then we'll see how things look for Monday, August 29th. And it was a very negative day overall. I provide more analysis and commentary in the full-length video, so please feel free to check that out if you're not too frustrated by Friday's action. But let's go back and talk about what happened. At the open, the market was slightly positive to slightly negative. We ended up having kind of a lower open, but right after Chairperson Powell came out and started talking, the market just tanked and really didn't look back. We quickly fell below S1 at 41.64. We went all the way down. This should be S2 at 41.29. As the day went on, we even went down to S3 and fell below that at 40.77. We ended up closing right at the low, and we were down 3.37%, a pretty solid down day and an across-the-board down day for all stocks. Volume was still below average, even though it did pick up in the session. We're pretty much negative now as far as our technicals are concerned, because this scenario that maybe inflation has topped out is starting to come down, and so the Fed can pivot over to being more dovish or start to decrease their rate increases, if not stop or even start to cut interest rates. This is the second time this has happened now where the market's been spooked out by this. So we're not seeing a pivot. The markets didn't like that. So now we're going back to the old scenario that the Fed is more hawkish. Right now, we have the geopolitical concerns, the whole list, but they kind of are at the background currently. Earnings are still coming out, and then we have the recession debate going back and forth. We might see some follow through to reaction of the Fed speak, because now you have the weekend and people are doing their analysis, and you'll watch some YouTube videos and people might make some decisions and then act on that in Monday's session. So the markets did not like the speech. It's not what they wanted to hear. So our sector rotation and our positive setups, they're still valid. They're still there, but they're showing some weakness. The 10 to the 5 and the 10 to the 2, they still remain inverted as far as the yield curves. We're seeing interest rates, the dollar, oil in an inverse correlation right now to stocks. So if one's going up, the other ones tend to be going down and vice versa. Fear is starting to increase. We had personal income that came out at 0.2% on a month-over-month basis. They expected it to be higher than that. So the fact that it was a little lower than that means that people are bringing home less. Personal spending was up 0.1% on a month-over-month basis. They expected it to be up 0.4%. This could have been taken as market-friendly, but folks were more fixated on what Fed Chair Powell was going to say. The PCE price index was actually down 0.1% on a month-over-month basis, where they expected it to be up 0.1%. This translates over into a 6.3% year-over-year basis. In June, it was at 6.8%, so it's actually declined a little bit. Again, the market could have taken this and went, yeehaw, let's go to the moon, but they didn't like what was said in the speech. The core PCE price index, when you take out food and energy, it was up 0.1% month over month, where they expected it to be up higher than that, 0.3%. Again, could be seen as positive. This translates into a 4.6% year over year basis, where we saw 4.8% in June. So all of this showed some decline in inflation. This would fit into the scenario that the market had been creating for itself. The only problem is the Fed doesn't care about that, at least for right now. We also saw a bit of a tick up in consumer sentiment. The final reading came in at 58.2, where they expected it to be at 55.8, pretty much the reading that we saw 2 weeks ago. Just to give you an idea, a year ago it was at 70.3, which isn't all that high in and of itself, but look at how far things have fallen since then. We have seen a cross with our ADX. The red line has crossed below the green line. So it's a negative trend, but the ADX continues to fall, so it's a weakening trend. I now have bias as negative and momentum as negative. So what's our outlook for Monday? Technicals are negative, but possibly on a one-day basis, could have been overdone. Sentiment is becoming more fearful. We don't have any economic reports coming out on Monday. the whole list of geopolitical events, but right now, as far as the stock market is concerned, the Fed is at the top of the list, but that could always change. So what are our scenarios? We have to go with a down scenario right now. That's what our charts are telling us because of all the reasons and all the headwinds that we have. The technicals are negative, but possibly becoming short-term overbought, possibly overdone on a one-day basis as well. We can't really look at an up scenario right now because our technicals are negative. Our scenarios, our rotation, our setups, those are still there, but we kind of have to put those back on hold again. The technicals, we're losing some of the moving averages. If we continue to fall, are we going to be able to find some support at some of these other levels? We didn't find really any support in Friday's session other than round numbers. And we're not really going sideways unless you use the ADX because it's below the moving average and it's declining. That might suggest that we're in a sideways environment, but from a more pure standpoint, the ADX is still above 20, but it has turned negative. So our conclusion, not hard on this one. The S&P is negative, short-term negative, intermediate-term negative, and long-term negative. So thank you. Please feel free to check out the longer, full-blown edition of the daily video update. I hope you find this helpful. I will be preparing the weekly video update as well as the intermarket analysis update over the weekend.